a lot of people just tune out, right? Holidays, they're not really engaged. And the holiday season, we joke about it, but it tends every year and every cycle, it's starting earlier and earlier.
It really is.
Back in the day, it didn't start until like literally after Thanksgiving weekend. Like you were roaring into Thanksgiving, work hard on Wednesday, Thanksgiving's Thursday, and now the holiday season officially kicks. I feel like now like holidays are starting right after Halloween. It's like end of October. Like the mentality and the psychology of people kind of getting more laid back, checking out, you know, focusing inward, not having any real incentive. And look, we had a very unique last year, but Q4 especially, where inflation, negative economic data, lots of fear peddling was so prevalent in the market that it only added to this withdrawal of the market, buyers and sellers. And I think all of us as lenders and agents felt that in the sense like, where are the people? What's going on? So we've all focused fundamentally on developing better processes, better systems, right? Like the people that are good at doing that and using the opportunity and the time for that. But now what's to come, right? So we had a rate environment over the last year that doubled.
Yep.
So last year they doubled. They went from presumably around, 3% to, in some cases upwards of 7%, depending on the type of loan category and the qualifying borrower you are. So that was a big deterrent. And since that time, because inflation and mortgage rates trend the same way, and for the last year, the household name that is most common is the word inflation. So that's why rates are up. If anyone ever, well, what was it that actually did it? You keep it real simple. It's just inflation. That's the single driver of mortgage rates is inflation. When it's hot, so are mortgage rates. When inflation cools off, mortgage rates come down. So now, because of the Fed rate hikes over the course of the last year, and they're not done, but they were late to the game, and then they came in very aggressive with a big bat, and they were swinging big rate hikes, 75 basis points, 50. They'll probably do another. They just did 50 this last month. They'll probably do another 50 coming again. The target's pretty high, but the mortgage market sees that. The mortgage bond market sees that as the Fed is very serious about fighting this inflation. They may have been late to combat it or even recognize its existence, but the fact that they're continuing to raise and saying our work isn't done, the commentary that's coming out of the Fed, the mortgage market likes that. So we've seen inflation data starting to cool, which means mortgage rates have started to cool. There was an article today that came out in CNBC that it hit a several week low, mortgage rates have. So they're trending in a better direction. Does this now suddenly mean that the market goes back to being what it was? No. But this window of negativity is closing. And that window of negativity for you, if you're a buyer, potentially if you're a seller, depending on how you want to look at it, but as a buyer, that has been a massive opportunity for you. There was a piece of content I just put out today that said the best thing that happened to the market for you as a buyer has been higher rates. And people are like, how could you say that? That's a terrible thing to say. No, it's because of higher rates that we've had more opportunities, more incentives, better negotiation power, more reasonable prices, closing cost credits, whatever it might be. All of that has come by way of higher rates. Lower rate environments, as you know, Tim, that doesn't allow for that. You can't even utter those words. You got to pay, and you got to pay high in order to get it. And that's it.
And you want to know the irony of most of that is, I think I've heard recently a couple of people getting below 5% interest rates in the last couple of weeks. And I think most of what was being pumped scared people so much that they didn't even inquire about what type of rate could it, like everyone just assumed that it's going to be 7 or it's going to be 7.5 or it's going to be 8 or something, this crazy number.
Yeah.
Which caused deal volume to just completely fall out.
Right.
And saying before, where did the people go? The deal volume fell so abruptly that I think, coupled with that media narrative of this is an awful time to buy, the world's collapsing, there's going to be a massive real estate collapse. It just made enough people go, this is too scary. I don't want to touch this.
Look, and we can't blame people for that, right? Because that's just the way the world works. The thing I always caution people and tell buyers, look, study and follow the big money. The institutional investors,
like what
funds, Blackstone, exactly. JP Morgan, you already know. They are sitting on the sidelines. They've basically said, they've stated it publicly in the media. We've got billions of dollars, consortiums of funds standing ready to buy as soon as there's just a little bit of a pullback. So what does that tell you? Are they being opportunistic and trying to buy up in some wake of a crash? No, they're waiting for what is a pullback. And there's a difference between a pullback and a crash. A pullback's what we're experiencing. That's more of a coming back down to earth. A crash is something sudden and caused by something. A pullback is just something that alters demand, which is what the higher rates did.
Yep.
So yeah, there's a little bit of a pullback. You've got all this institutional money now that's saying we're going to come in. They're going to buy up as many houses and basically try and create a bit of a renter society. And they're going to buy up a lot of multi-unit. So for you as a prospective buyer, you've got to recognize, okay, they've got confidence in this asset class of real estate, which means I shouldn't waver on it. But the danger in waiting for this pullback and rates to come down or whatever it might be is you're going to have to compete against them. And that's a very big bat that swings in the market, because no matter what happens, we still have the one variable that was present a year ago, which is low inventory. And Tim, you know, as an agent, nothing at this point to date, nothing up until now is changing that. So we're still going to be dealing with a what's
there
that?
was 9 properties on Broker 2 and Marin yesterday.
Thank you. So this is
9.
the case of 9. That's like, look, there's an imbalance of available buyers, of available homes to buyers by roughly 4 million across the entire country. That is a lot. That's a staggering number. And building is not going to catch up. Building is slowing down, if not ceasing in some markets completely, because builders just want to wait and just allow things to kind of clear a bit before overextending themselves. In markets like Marin, San Francisco, they can't just suddenly build new homes. There's no inventory that's coming from anywhere. It's going to have to come from existing homeowners. And unless there's a shock to that market, specifically their jobs, you're not going to have a very likely outcome of someone who's got an amazing interest rate with a very cheap mortgage payment suddenly decide to sell and take a more expensive payment and higher rate elsewhere. So we're going to be in a low rated or low inventory environment for some time. And we've got big institutional investors and big money sitting on the sidelines waiting to jump into real estate opportunistically, but they believe in the asset class. So whatever little inventory there is there, you're going to be going up and competing against these guys. So my advice for buyers, and don't get me wrong, a lot of people may hear this and say, oh, you're just saying that because you work in real estate and lending. No, I'm saying this to try and make sure that you get a better deal. You can choose to wait for a while. I just want you to know who the opponent is that you're dealing with, who the competition is. And that's it. Right now, right now, the competition is your psychology. In about 6 to 8 months, the competition is going to be billions of dollars. Yeah, and everyone else.
Billions of dollars, yes. I'm sure they'll hedge towards more of a middle America, like buy 20 houses for $2 million as opposed to buying 1.
Sure.
But again, I think it comes back to that confidence factor, right? If massive teams of data analysts and asset managers like are tunneling in on, we've got billions of dollars to spend on this asset class because it's going to be depreciated enough to be like, hang on a second, we could buy and do a 5-year hold period while making money on our money and then sell when the market comes back up. If there's billions of dollars of institutional money believing in an asset class, it makes no sense why the individual shouldn't at least watch.
Totally.
Really appreciate how much work went into that confidence. Like,
I agree. Yeah, I agree with you. Yeah. Look, I mean, people need, at the end of the day, shelter is not going out of style here in this country, right? Everyone needs shelter. So whether they're giving up a place, they're going to regain shelter or reacquire shelter in some capacity, whether it's buying a place, renting a place, downsizing, upsizing. So that turnover will always happen. There's so many household formations. There's so many hands in the air saying, I'm an eligible buyer. I may not want to buy right now, but I am keen on buying at some point. And we've got a huge imbalance of inventory. So all of those variables still point to a tight market that's pretty secure in terms of its valuation. Yes, there's a little bit of a pullback, which is causing a 5 to 10% pull in many markets, maybe not all, but many. That's nothing. That's totally normal. And we should be grateful for it because things were savagely unhealthy just 1 year ago. I mean, you know better than I do, man. You were on the front lines of it. It was not normal.
And that was the opposite end of the spectrum. If I didn't feel confident telling sellers, invest this money, do this in staging, a year and a half ago, I was not confident in saying this is a good deal because you might be competing against 6 to 10 people and that price just got driven up. Yeah. But on that topic, actually, do you think we've sort of touched the bottom? Like, do you think we've sort of, whatever that leveling out, hollowing out point is, it kind of to me, it feels like we might have touched it in Q4.
Yeah, I feel we have, just from the simple emotional factors of interest rates, because that's the thing that most people, and not always correctly, but most people equate a housing market to. They feel that if mortgage rates are low, it's somehow a good market or a good time to buy. And when mortgage rates are higher, that it's a bad time to buy. And it's actually the opposite. It's actually the opposite because of herd mentality. Before, people had FOMO, right? So when everyone was jumping into the market, like, fuck, everyone's buying homes, like my neighbor's buying, everyone's moving, I better do it too. So you jump into it. And if you don't believe in bandwagon mentality, just think back to the pandemic and toilet paper. That's all I got to say, right? Just think back to that. That didn't work out. That didn't work out so well, but you can think about that. When rates go up and people think it's actually a bad time to buy, people's fear is fear of making a mistake.
Sure.
Because of all the negativity and the psychology that's going on out there and the head games that are being played. So they need to, you know, again, recognizing it for the opportunity that it is, and knowing that if you want to buy, whether it's now or later, just know that there's consequences that could come with either side of that coin. And that way you can make a little bit of a better decision. But, you know, pros and cons to both of it. Everyone's just got to do what's best for them. But as an asset class, as an overall market, like, this is a pretty fairly well secure market. And to your point and question, you know, did we kind of touch the bottom? Yeah, in the sense that mortgage rates are kind of turning and starting to trend downward. That trend is likely to continue and will continue, just based all the way leading up to May. And then we could see some sharper declines because of inflation really, really cooling off. And all of the data, because it works on a 12-month average. So everything we're looking at from a forecasting model, we're comparing it to what was going on 12 months ago. And these numbers that are falling off the back from 12 months ago were high numbers, very high, because that's when inflation was really starting to peak.
Like
12 months ago.
Yeah, for sure.
So these numbers that are coming in are replacing a high number, and they're not coming in higher than those numbers. So we know with a high degree of certainty and confidence that inflation will continue trending now based on that 12-month rolling average. And again, back to the earlier point, when inflation's cooling, so are mortgage rates. So people's confidence will start to go up, and you'll see more people enter the market. We probably will also see more sellers feel confident about selling, because nobody wants to be that seller that puts their home on the market and nothing happens, because then they're like tainted. It's like the guy who's single for too long, right? Everyone wonders what's wrong with him. So you gotta be on the market at the right time, and then get yourself off the market, right? Because otherwise perception and optics can be lethal. But yeah, they can be in real estate and dating, right? So I think psychologically and just, you know, overall market metrics, we're going to see a more optimistic market. You yourself said you were on tour and you felt a very different energy.
It was energy.
And people, and I think everyone's saying it.
The rain had just passed too. It was like the day after the rain, the sun's out.
And everyone for a very different energy in people. And I think
hold on, Tim, sorry.
That's Alexa.
I mean, these goddamn computers, man, and how they listen. I didn't even say anything, and then Siri just jumps in and starts.
Can you imagine if your name was Alexa in this day and age? Like, how annoying would that be?
I'd change it. I would go to a court and change it. I'd file for it. I mean, yeah. There's no way, man. Sorry about that. I don't even know where that came from.
Totally fine. Yeah, like there was a palpable energy. It was the first day after the rain had stopped, so the sun's out. There's brokers out in the market. I was pinging a couple of agents to host some open houses this weekend, and 2 out of the 3 said we just ratified today after it was on the market for 75 to 100 days type thing. I'm like, okay, this is good.
Yeah,
this is good energy. Like this needs. I've been needing this. I think the entire industry of agents that are left have been needing. So it feels like we've turned, which is awesome.
I agree with you. We definitely have.